Okay, so I'm going to start the presentation. Can you guys see my screen? Okay, perfect. Okay, so it is 11:12 and I'm going to get started with the presentation. Okay, so this session should take of me talking just about 30 minutes, and it's just going to cover investing, what you need to know to start investing in the stock market. I know investing, especially this week with all that's happening with AMC and GME or GameStop, investing is a very hot topic. So that's what we're going to cover. We're going to cover some basics you need to know before you start investing in the stock market and all of that. So I'm going to go ahead. So my name is Chinazom Chidolue. I'm a chartered professional accountant. I'm the head of wealth advisory at Shecluded Financial Services. I'm also a chartered financial analyst, level 3 candidate. I started my career in audit. So I started my career working in audit. I'm sure if you work in a corporate setting, I'm sure you've probably had some external auditors come to your office. That's what I used to do. I used to be one of the people bugging the accountants for their books and helping them to reconcile and make sure that everything is right. So that's how I started my career. After I got my chartered professional accountant designation, I decided to transition to wealth management. I worked at the Royal Bank of Canada and helped to manage over $750 million in assets for high net worth individuals and corporations. And essentially what I helped to do was just help them construct and implement their investment portfolios to suit their own investment goals. So that's what I did. I did that for a couple of years. And my passion really is just helping people live their dream lives by helping them build wealth. So that means, taking away the confusion when it comes to what to do with your money, or even just helping people save or invest towards certain financial goals. Whether it means, saving towards school, whether it means saving towards a car or a house, or even just, saving enough money to get away from an abusive situation, whether it's a relationship or whether it's, a job you don't like, right? So that's what I do, and that's my passion. I started blogging when I was like in 2015. So it's something that I love doing and something I would do even if I was not paid for it. So that's me. So I work as the head of wealth advisory for Shecluded. And Shecluded is a digital financial services company based in Lagos, Nigeria. It was founded 2 years ago in Lagos. And what we do is we provide financial education, health insurance, loans, credit, business and wealth advisory, and community for business women entrepreneurs. So we have over 15,000 women in our community right now. And specifically for wealth advice, we realized that a lot of women are not very intentional with their finances. So we decided to launch this to help them create strategic plans to help them accomplish their goals, right? So you work one-on-one with the wealth advisor to help you understand your current financial standing, whether your net worth, whether it's your income, help you even understand how much you spend every month, and then identify and prioritize your financial goals. We also help you create customized financial and investment goals, investment plans to help you achieve your goals. And if you're interested after this session, if you realize that, stocks, investing, this is all gibberish, I don't want to deal with this and I need some one-on-one help, feel free to go on Shecluded.com. We have a store where you can pay for services, or you can also shoot me an email at chinazom@shecluded.com. So what are you going to learn from this session? What are you going to learn from this 1 hour on your Saturday morning where you could be, sleeping, or working out, or doing something else? First of all, you learn all the basic things you need to know before you start investing in the stock market. You would understand what investing is and is not. There's a lot of confusion about that. Not everything you see online is actually investing. Then the stocks, you also learn about the cardinal rules or the principles for investing, and you will see how you can buy your first stock or ETF on a stock exchange. So let's begin. And also feel free to stop me if you have a question. Feel free to jump in or raise up your hand and ask any question you have. So what is investing? Investing is essentially putting resources, whether it's time, effort, or money, to achieve some future benefit. So for many of us, our biggest investment is ourselves. You know, we spend 4 years in university. If you're a doctor, you spend 8 years in education, improving yourself to become a doctor, right? So it's time, it's effort, it's money you put into achieving some future benefit. This class or this session is going to focus on the money part of things because that's why you guys are all here, right? So now I said I'll cover what investing is not. There's a difference between saving, investing, and speculating. Saving is less active. It's just putting cash away in some place, right? It could be under your mattress. It could be a piggy bank. It could be a savings account or a checking account, whatever. So is is not very involved, and it usually has very, very low returns. I mean, in Nigeria right now, we're looking at saving account interest rates, annual interest rates below 1%. And in the developed or, globe, like in the US, in North America, and the UK, the returns for savings accounts are, less than 0.5% in most cases, less than 0.05% maybe. So that's saving. Speculating is targeting high returns within a very short period of time, solely based on the expected price movement. So because you're speculating, you're not sure what would happen, and because you're just looking at the market movement, it's usually very high risk. I'm sure you guys have heard the buzz about AMC and GameStop online this past week, where major investors and hedge funds were speculating on the price of the investment of the stock, right? That's what you call speculation. It's not based on the value or the fundamentals of the asset. It's just based on where you think the price is going to go. So that's what you call speculation, right? And you probably see a lot of this with cryptocurrency like Bitcoin, Ethereum as well. Now, investing is actively putting your money in assets to make you money because you believe in the fundamentals or the long-term value, right? So that's the main difference between saving, speculating, and investing. So I hope that's clear, but feel free to ask me any questions. So there are different asset classes and there are different ways you can invest. You have stocks, you have bonds, you have private businesses, you have real estate, you have art, you have land. There's so many things you can invest in, right? I always like to say the biggest investment or the most important investment is the investment you make in yourself. So that's going to school to make more money down the road, right? So you also have to think about yourself as an investment, right? Whether it even means, just reading every Saturday, waking up and just reading to pass a professional exam. That's also an investment in yourself because you believe that you make some money down the road, right? So that's investing. So when you think about investing and asset classes, you come across the term the risk-return trade-off. So in finance or in the investing world, you have what you call a risk-return trade-off, which is low risk, low return, high risk, high return, right? Typically, right? So some low risk investments are things like the money market, which is essentially just cash. Fixed income or bonds that gives you interest income. You have stocks, either you call them equity as well. Stocks, shares, equity investments. It can be either in a public company like Amazon, like Apple, like Facebook, or it can be in a private business. So Shecluded is a private business. It's not listed in the stock market, but you can decide to own shares by investing in the company, as an example. So that's equity, and that's a bit more higher risk than the rest of the other two I've mentioned. And then real estate. In this chart that I took from Cardinal Capital, which is a capital management company, asset management company in Lagos, they have real estate as high risk, high reward. But I think that's questionable. It depends on the kind of real estate investing. But I hope this kind of gives you an idea of what kind of investments are out there. Now, why do people invest? Right? Why do people invest? The first reason people invest is to outrun inflation. Inflation in the developed world, the UK, US, is around 2%. So every year, the cost of living increases by about 2%, right? In Nigeria, it's upwards of 13% every year. So that means your purchasing power actually reduces. So if you're making the same amount of money you made last year, like by this time if you make the same amount of money you made last year, right, you're actually poorer today because your naira is able to purchase less items, right? Especially with food in Nigeria. I think the food inflation is about 17%. I'm sure you guys have seen the price inflation for rice, for tomato over the years. So people invest to hedge against inflation, right? So that their money is actually helping them to, to increase their purchasing power. The second reason why people invest is to grow their wealth. The US stock market, or the S&P 500, which is one of the indices you use to track the performance of the US stock market, the average annual return for that is about 10% a year. So that means every year, just by buying a random basket of stocks at the US stock exchange, you can expect to get about 10% every year. And now that 10% interest also earns interest. So that's the value of compounding. So because of that, you actually are able to grow your wealth exponentially. Another reason people invest is to plan for retirement. So they keep saving and investing during the time where they're making a lot of money. So when they're 20s, 30s, 40s, 50s, so that when you're 60 and they start to retire, they actually have a solid wealth base, right? So that when they're not working, they're able to keep, making money. The fourth is to reach your financial goals faster. Whether it means to save enough down payment for a house or whatever the case might be. Another is to support others. Some people just invest just because they want to support their friend or just because they want to support their family members. Another is to be a part of something. I'm sure you have seen with Tesla, a lot of people are Tesla diehards, for example, and Elon Musk fans, right? So people just bought Tesla, not necessarily because they think Tesla would actually increase in value, but just because they love the value. They love the fact that there's less carbon waste or fossil fuel waste in the environment. So that's just it, right? So those are some reasons why people invest. But investing is always a personal thing. Depends on why you want to invest as a person. So what is a good investment? Now, I get this question a lot. A lot of people just come and ask me randomly, oh, do you think cryptocurrency is a good investment? Or do you think that Facebook is a good investment? I always say, why are you investing? So the point being that any investment can be a good investment. This bottle of water, like investing in, I don't know, Nestle can be a good investment. But it all comes down to what your goals are. So a good investment, first of all, is relative, right? And how you know something is a good investment for you is if it intersects with your financial goals, your risk tolerance, and it makes you money. So your financial goals, like for example, if you're investing to save enough down payment for your house in 5 years, that's a goal of yours. So you don't need the money for 5 years. So investing so that your money can keep making you money for the 5-year period. Whereas some people just put money in things just because for the fun of it, just to see what happens, right? So your financial goals are very different, and your what you're looking for is very different. So that would determine what kind of investment you would put your money in. Now, your risk tolerance. So your risk tolerance is your ability to take risk and your willingness to take risk. So your ability to take risk means based on your financial standing. For example, if you have ₦1 million in debt and you make 50,000 naira every month, investing shouldn't be top of mind for you just because your risk ability to take risk is very low, right? But your willingness to take risk means your risk appetite. Some people just are naturally they love risk, right? They are risk seeking, as we call it in finance, whereas some other people are risk averse. All that being said, an investment is only good if you can tolerate the risk. There's no point of having heart palpitation, investing in something that gives you heart palpitations every single day if it goes down 10%, for example. And that's what you see with cryptocurrency. With all the volatility in the market, people literally just panic and sell. So a good investment will also take into account your risk tolerance. And without making money is, it goes without saying. So a good investment also should make you money. It might not make you money today, it might not make you money tomorrow, but you should expect it to make some money for you in the medium to long term. Now, let's get into the meat of this, right? Stocks. Stocks are also known as shares or equity, and it's an investment in a company and its profit. Essentially become a part owner of the business. And actually, I'm just going to let anyone unmute yourself, tell me what you know about stocks and what some of your conceptions about stocks. Can somebody volunteer, please? Feel free to jump in and volunteer. Let me know what you think about stocks. Or what is a stock? You can also type it in the group chat if you want. Just tell me what you think a stock is. Well, since no one is going to volunteer to answer.
I mean, we think stock is kind of like a piece of the company which you can buy and kind of own, and it's semi-tradable and all. Who's sold on the market.
Oh, lovely. Thank you. I didn't get your name. Who was that, please? Oh, so yeah, that's actually correct, right? So a stock is essentially a share, a part ownership in a company. And the reason why companies issue stocks or sell stocks is to raise money for to fund their growth or for a certain project. But that's why companies issue stocks. So think about it. MTN Nigeria wants to expand their company in Nigeria, right? So they want to get more masts all around Lagos and neighboring cities. So they say, okay, I want to raise money, and they do what they call a public offering. So they offer shares in the public, and people can buy and sell on the stock exchange. So that's what a stock is. So if you buy one stock, you're a part owner of the company. So if you have any stock, you're actually an owner of a company, and the reason why that, and you would also get invitations to annual general meetings for shareholders and things like that. So it's kind of cool. So how do you make I think Chiagozie said stock is a high risk business. It can be, and I'll tell you why stocks are considered a high risk business sometimes, but it doesn't have to be. So that's what I'm going to tell you. So ways to make money with stocks. Number one is capital appreciation. So the stock goes up in value and you sell for a profit. So imagine if you have Tesla stock, I think sometime last year it was like around $100, $200, and at the end of the year it went up to $400, $500. Don't quote me on that, I'm just from my memory, which is not that great. And you sell it for a profit, right? So to make money in that first bucket, you actually have to sell, right? So if your Tesla stock goes from $200 to $500, that's just paper profits. You only actually make money when you sell the stock. So you actually have to sell the stock to make money. So that's the first way. And that's called a capital gain. So the difference between the 200 and 600, that's $400. $400 is your capital gain. The second way to make money holding a stock is dividend income, right? And that's payments to shareholders. So some companies pay their shareholders the extra cash that they might have. They can pay this quarterly, usually quarterly. So that's another way to make money. Now, stocks, yes, are considered risky because the returns are not guaranteed. So when the stock, if you buy, MTN stock, for example, at 90 naira, right? Good. The stock can actually go to 170 naira, which I think is the price right now. So you're making 80 naira on one share. But next week it could go to 50 naira, right? So you bought it at 90, now it went up to 170, but now it's 50. So you've actually made a loss of 40 naira. That's why it's risky. And the second part of getting dividend income, MTN pays dividends, right? But the problem with that is that it's based on their discretion. It's not compulsory. So even after you give them your money, you might actually not, it's not guaranteed. So that's why stocks are typically considered more risky. And if you recall from the chart I shared earlier, you see that stocks are more risky than the others. So now there are popular stock exchanges. Like I mentioned earlier, stock exchanges are, essentially markets where you can buy and sell stocks, right? So there's the New York Stock Exchange, there's the London Stock Exchange, there's the Hong Kong Stock Exchange, and there's the Nigerian Stock Exchange. Now, the reason why I put a question mark for the Nigerian Stock Exchange is because because we in Nigeria think that the Nigerian Stock Exchange is big, but I'll show you how small the Nigerian Stock Exchange actually is. Now, so this chart just shows you the world's largest stock markets, right? Or the stock exchanges. You can see the total value of stock exchanges is actually 89.5 trillion.
Hi, Nazam. I think you're muted.
Oh, hi. Sorry, I was definitely muted. Sorry. Sorry. Thank you for letting me know. Can you guys mute yourself? Okay. So, so that means, okay, so this chart explains what the stock market, the global stock market, right? So there actually, this value of all the stock exchanges in the world is about $89.5 trillion. The Nigerian stock market is $43 billion, which is a lot of money. But now, relative to the global stock market, right? The Nigerian allocation is just 0.04%. So that means one, one like the Nigerian share is less than one of these black boxes. It's like less than half of one of these black boxes, right? So that just shows you that the Nigerian stock market is so tiny, which is why it's important to have a global mindset when it comes to investing. So you see in this whole class, I'm going to share, or in this whole session, I'm going to share different stock markets. I'm not going to focus on the Nigerian stock market because I need you guys to have a global mindset when it comes to investing, especially with technology. It's so much easier to do that right now.
Would it be possible to ask a question? What's the difference between the Nasdaq and the
Sorry, I think I muted you by mistake. Could you go ahead, please?
What's the difference between the Nasdaq and the New York Stock Exchange? Aren't they both like American, and isn't the Nasdaq like stocks they're traded in the New York Stock Exchange? So why are they different?
Yeah, so the Nasdaq is a stock exchange just like the New York Stock Exchange. They are both based in the US. It's just that some companies prefer to list on the Nasdaq. The Nasdaq typically has a lot of high tech, like technology companies. So they are both stock exchanges. It's just that they are just different stock exchanges. So it's very common for countries to have more than one stock exchange, but they're both exchanges.
Thank you very much.
No problem. Any other questions? Okay, I'm gonna go ahead. Um, so now, how do you invest in stocks? The first way to invest in stock is to buy stocks individually. So you can use a brokerage account, what you call a brokerage account, like Bamboo, like Chaka. If you're in Nigeria, if you're in the US, you can use Robinhood, you can use Charles Schwab. If you're in the UK, you can use, I think, Hargreaves Lansdowne, trading 212. So there are different ways to buy stocks. Using a brokerage. And it's best to focus on low cost brokerages that are low cost. If you're in Canada, there's Questrade, there's Wealth there's RBC, Investees, things like that. Now, the second way to do it is to use funds. Now, what is a fund? There are different types of funds. There's a mutual fund, there's exchange traded funds, there's index funds. I'm sure you've probably heard, at least you've heard mutual funds and what that means. A fund is essentially just a pool of money collected from several investors to invest in individual stocks or bonds, right? So there are 29 participants on the call right now. Imagine me, Chinazom or Shecluded, asking each of you to give me $1,000, right? So that means I'll have $29,000 in this fund. And now that fund I can use to invest in different companies based on whatever, the set parameters are. So I can invest in Nigerian companies, US companies. I can invest in any company I think would do well. Or I can say, you know what, I just want to invest in high growth technology companies in the US, right? So I can also do that as well because I believe that, that's the way forward and that's where I'm going to get the maximum returns. So that's something else I can do. So now, so that's why you have that's why you call a fund. So now there are mutual funds, which are typically actively managed. So that means you have a portfolio manager that is actually sitting there and making the investment decisions for the stocks, trying to say, okay, should we buy this or buy that? So the mutual funds, they're typically actively managed, although they're passively managed ones, right? Where you don't have a portfolio manager actually making the shots. And then there's also exchange traded funds, so which is many cases more passively managed and it trades on the stock exchange. What that means is you actually have computers just replicating exactly what is happening in the stock market. For example, you can have an S&P 500 ETF. So a fund that just tracks anything that the S&P 500 ETF or index or the US stock market index does, right? It just tracks that performance. And it's typically cheaper and it's also traded on the stock exchange. That means you can buy or sell it using a brokerage just like a stock. Whereas mutual funds, you can't buy it on a stock exchange. You have to go to a bank or go through a bank and then subscribe to have those mutual funds. And you only see the price of the fund at the end of the day. So it's not trading in real time. So that's the difference between stocks and funds. And then the third way, which I didn't include, is using a robo advisor. So a robo advisor is essentially just like a tech company that invest for you, right? So they'll put together these exchange traded funds or these mutual funds or these stocks, and then you give them your money and they invest based on your goals. So let's say you want to invest in a fund that's balanced. So maybe 50% stocks, 50% bonds. So you give them your money and then they will just automatically do this for you. That's what a robo advisor does. Okay. Now, how much can you earn annually in the stock market? I mentioned earlier that this is not a Nigerian stock market class, right? So I'm going to be talking, the US stock market, like you said, like you saw in the previous, the US stock market, like you saw in the previous slide, is actually about 36%, 46% of the global stock markets, right? So that's why I'm going to focus on the US stock markets for now. So US stock market, how much can you earn annually? So this is the S&P 500, and the S&P 500 is Standard and Poor's 500, and it's the 500 biggest companies on the US stock exchange and the US stock market, and it just shows you how the companies are performing. The value of the price is the stock market is performing essentially. So ever since 1990 to date, you can see that the stock market is going upwards, right? So you can see that in 1990 it started around just maybe 480 points, and now it's currently 3,787 points, right? Now, over a 10-year period, the US stock market has averaged annual returns of 11.4%. So that means if you just buy randomly like any fund, like now you know what an ETF is, now you know what a fund is. If you just randomly buy any fund that gives you exposure to these like the 500 biggest companies on the US stock market, you should expect to earn 11.4% every year. Now, over the past 5 years, we've had a very, very big market rally. So that means the stock market has been doing really well. And the return on that over the past 5 years, the average annual return is 14.3%. And from year to date, so from January 1st to January 28th this year, your stocks probably would have done about 0.8% for the month. So that's kind of what you can expect to get, and that will be your benchmark in selecting stocks, right? So that's how much you can expect to earn. The Nigerian stock market is a lot more volatile. Actually, I put a chart, but I don't have a chart right now. But it's a lot more volatile. I think the peak, I think our peak rates in the Nigerian stock market was back in 2008, and I think it hasn't really recovered back to those 2008 rates, right? So imagine if you put money in this Nigerian stock market in 2008, expecting a return annually. More often than not, you probably would have lost money, right? But the U.S. stock market has an upward trajectory. We know there's a lot of volatility, but it still goes up. So that's how much you can expect to earn conservatively in the U.S. stock exchange. Let me know if you have any questions so far.
Well, we were trying before, and it wasn't working.
Okay, so now the cardinal rules of investing. Number one, start early and be consistent. So you have to utilize the concept of compound interest. So compound interest is just the concept that the interest or the returns you're getting actually make you money. So like I showed you in the previous slide, you can expect to earn anywhere from 11 to 14% annually, conservatively, in the U.S. stock market, right? So that means, let's say you start with $1,000, and in a year you're made 14%, which is about $140. Now that $140 would also make income, would also get you returns going forward. So that's what you call compound interest: interest on interest on interest on interest on interest on interest. So, and also, so that's the value of starting early. Now let's look at a scenario, right? Imagine you have two brothers. One of them is 30 and the other one is 40, right? And they invest $5,000 annually until they retire at age 65. Now let's look at that. So the smart brother starts at age 30, invests $5,000 every year, and the less smart brother starts at age 40 and invests $5,000 every year. Obviously, so that's 10 years difference, right? So he hasn't invested for 10 years, so that's about 50,000. This less smart brother has invested $50,000 less than his smart brother, right? Okay. So now what is the impact? Why do I need to invest? I can just wait till I'm 40. I can just wait till I'm 50, right? Okay. So I'm just going to mute that person. So let me show you the impact of waiting. Now you can see that $50,000 over 10 years actually translates to $535,000. So $500,000 at age 65. I don't know if you guys understand what I'm trying to say. I'm trying to say, because you don't invest, if you just because you don't start soon enough, you actually would be losing out a lot of money, right? So $50,000 over 10 years actually ends up being $535,000, right? And that is using, I think, a conservative annual return of about 8% a year, right? So imagine if you were investing in higher risk or high growth sectors like stock, which can give you like technology, which can give you 22%. Then that 530 something thousand or $500,000 will probably be closer to $4 or $5 million, right? And that's just by losing 10 years. So that's why I say start early and be consistent. Now, another thing I want to point out here is that people always kind of try to time the market. They try to say, okay, well, maybe I should just wait. Maybe I should just wait till the market is low. Maybe I should just wait to a good time. There's no good time. You can't time the market, right? You just can't. So it's always better to just instead of waiting to have $10,000 or $100,000 or 100,000 naira to start investing, just invest consistently. So month over month over month, just put some money in the stock market. And the thing is that it smoothens out, right? So when the market goes down, right, you buy. I'll show you the chart. So when the market is here and the market goes down, you can buy here, right? So it's cheaper for you. And when it goes up, yeah, you can buy here. Okay, maybe it's a bit more expensive now, but that's fine, because when it goes back, it's still going to go back up. That's what I'm trying to say. So there's no way to time the market. You just have to keep buying, keep investing in high quality companies, and that's how you win the game. So that's the first rule. The second rule is to diversify. And the way to diversify is by asset classes, so stocks, bonds, real estate. You can diversify in industry, so tech, manufacturing, pharmaceuticals. There are different sectors and industries. Another way to diversify, which is so important, is geography. You don't have to focus on Nigeria. You don't have to focus on the US. There are a lot of returns to be made all around the world. So you have to diversify geographically. Do not be a local champion when it comes to investing. It's not on brand, honey. You can achieve this easily using funds, like I discussed earlier. The third rule is to invest with a goal in mind. For example, what is my goal for investing? Now, if you invest just for investing sake, you might make some mistakes. So it's always better to have a goal in mind. Like, I want to save $20,000 for a down, or let me see, 2 million naira for a down payment on a house in 5 years, right? And that would determine the kind of investment and the kind of risk you're able to tolerate. And then that comes into what comes into question is your time horizon. How long are you willing to leave that money in the market? The reality is that the market will go up, down. That's what you call volatility. So the rule of thumb is that if you need any money for within the next 3 years, don't put it in the stock market. Just don't put it in the stock market. Just put it in something like a money market fund or a bond or something like that. Something that's much lower risk, because you might need to take out the money at a time that is not so favorable. So if you saw what happened in March 2020, when the stock market, I think, was down like 20 something percent from the peak of the year, right? Imagine if you needed the money then because you lost your job or something like that. You would pull it out and lose 20% of your investment. And then, now you've locked in the loss forever. So that's why it's always good to invest only money that you don't need within the next 3 years at least. And then the fourth rule is to stop being emotional. Especially this week, there's been a lot of noise about buy this, sell that, don't buy this, don't sell that. So it's always important to stick to your plan. Don't panic, drown out the noise, and focus on your plan. That's why I always say it's important to have a goal in mind. The fifth point is to keep your expenses low. Now, expenses add up very, very quickly. So, investment management fees and trading fees that you pay to keep trading your account actually add up, and they eat into your returns. So you have to be mindful of that. And that's why I recommended exchange traded funds, right? Because they're low risk. I think usually they cost less than 0.05% or 0.1%, versus mutual funds, which kind of cost like 2% as a management fee. And another thing to think about, because I know some of you are not in Nigeria, you're not based in Nigeria, is you have to think about taxes. Now, the highest cost to investing is actually not fees, it's actually taxes. If you live in the UK or in the US or in the developed world, the highest cost to investing is your taxes, how much you're paying in taxes. So you have to think about it, and you have to always make use of tax advantage accounts where possible. So for example, if you're saving for retirement, which is maybe for 30, 40 years for most of you on the call, most retirement accounts don't tax your investment income. So that means that over the 30, 40 years you're investing for retirement, you don't get taxed on that, right? So that's something you can take advantage of. Now, how do you buy your first stock or ETF? I'm promising I'm running up. So now you've taken the steps, you're financially stable, you've saved your emergency fund, you don't have any high interest debt, you have the basic information you need to start investing. Now you're ready to buy your first stock or ETF using a brokerage account. If you're in Nigeria, Bamboo or Chanchaka are good ones to use. If you're in the US, Robinhood, Charles Schwab are good ones. If you're in Canada, WealthSimple and Quest Trade. In the UK, Hargreaves, Lansdowne, I don't know if I got the spelling correct, and Trading 212 are good options. Well, as I said earlier, try to go for low cost options. But before you buy anything, do your research. Like I said, it's not just, don't do something just because somebody said you should do it. Don't invest in something just because your friend said, oh, buy this. No, especially if the person is not like a qualified investment advisor. So, yeah. So that's that. So now the summary is investing is key for wealth building. Like I mentioned, inflation is very high. Make sure you're investing to build your wealth, because if you don't make more money each year to meet up to inflation, you're actually getting poorer. So that's why you have to be investing. The second way is there are different ways to invest. Choose what works for your situation. There's no such thing as a good investment. There's no such thing as what is the perfect investment. Investment is such a is such a personal thing that you have to do what works for you. Now, the third thing I want to highlight is you have to have basic principles, and you have to be disciplined. Even traders who don't invest and just speculate based on the market movement, they say, okay, I'm going to get out at this price. This is the actual value of the stock. I'm going to get out at this price, and you have to be disciplined in that. And the fourth and most important thing in the stock is to start now and be consistent. So that's all I have for today. Let me know if you have any questions. And as I mentioned at the beginning of the presentation, Shecluded is a financial services firm for women, but we also work with some men if you're interested. So if this presentation has not been very, very helpful to you, or you realize, damn, like if you realize I need some help, I just can't grasp what you're saying. I can't be bothered. You can work one-on-one with the wealth advisor at Shecluded, who's like a qualified wealth advisor. We have a discount for 10% for today only. We can work with you one-on-one using a one-time plan, so you pay 20,000 naira for a 1-hour session with the wealth advisor, or a 3-month plan where you pay 45,000, a 6-month plan at 80,000 naira, and a 1-year plan for 160,000 naira, which is a steal. Because if you go into any bank in Nigeria, they probably wouldn't listen to you if you don't have at least 10 million naira in your bank account or something. So that's what I have to say, and let me know if you have any questions. Zini says she has a question. Zini, feel free to unmute yourself and ask.
Hi, Chinazom. Can you hear me?
Hey, I can hear you.
Okay, I have noise around me because my kids are watching TV. But anyways, so I'm very interested because I've been following the story, the Robinhood story, and I've been following, platforms that talk about investing and things like that. But I was speaking to a friend who is a US citizen, and he said that you would need a social security number to be able to take advantage of the stock exchanges in the US. So I don't know. Can you just, explain how people in Nigeria can get on brokerage platforms and actively start investing?
Yeah, Zini, that's an amazing question. And like I mentioned, it's so important now for you to have a global mindset when it comes to investing. Don't just look at the Nigerian stock market, especially with the economy the way it is, with inflation, with Naira devaluation. It's so important to have a global mindset. So, Zini, I'm very happy to answer that question. So if you're in Nigeria, yes, you won't be able to access any of those platforms. You have to have a social insurance number in most cases. But we actually have fintech platforms that actually give you access to the US stock markets from Nigeria. One of those is Bamboo. Bamboo is a Nigerian brokerage, online e-brokerage platform. So you can go and buy it, pretty much almost all ETFs and almost all stocks. They even have some derivatives trading as well. And they also allow for fractional investing. So that means Amazon stock, I think, is around $3,300 for one Amazon stock. Imagine if you have only $100, but you really, really want to own Amazon, and you only want to own Amazon. You don't want to own everything else that an ETF or a mutual fund will offer you. What you can do is actually buy a fraction of the Amazon stock. So that's what you call fractional investing. Bamboo is one of them. Chaka is another one of them. They're both brokerage platforms based in Nigeria. So you can use your Naira card, you can use your BVN, and then register on those platforms, and to give you access to the US stock market.
Sorry, I have another question. So if you're using Naira to invest in USD, would they show you on the platform the exchange rate that they're using to invest your money? Because I'm guessing they'll have to, convert your Naira to dollars and all that. Then is the platform super easy to use? Because I'm just, I've followed Shecluded for a while, at least I've seen you post about them, and they're looking to bring that financial knowledge to even people in the lower class. So is it something that people who are not quite there yet, more mass, people on that level can access and use easily without losing money or
Yeah. So first of all, Bamboo it's actually in dollars, so it's dollar denominated. So it would show your investments in both dollars and the Naira equivalent. So you can use your dollar card, and By the way, I'm not paid by Bamboo, so this is just free promo for them. I think I would have to talk to their people. Just full disclaimer: I don't. This is not sponsored by Bamboo or Chaka or any of these companies. So you can actually use your domiciliary, link it to your domiciliary account, your dollar card, your Naira card. You can choose whatever option you want. So I think they have like 6 or 7 payment options on the website. So you can show both in naira and dollars, and all the investments you're getting, all the income. So, like for example, your dividend income or your interest income, if you're buying a bond, would actually be paid to you in dollars as well. So that's the first question. I hope that helps. The second one is it easy to use? It's extremely easy to use. I know a lot of people that use it. I have used it very, very limitedly, but I've only used it for very, very limited transactions. So, but it's very easy to use. Trust me. Like their user experience is very interesting. I actually recommend it to many of my clients. The only thing I don't like about the Nigerian platforms is that they are very, very expensive. And so that's just full disclosure. They're very, I think maybe about 1.5, just definitely above 1% for trading fees. So that means if you want to invest 1,000 naira or 430,000 naira, that you would have to give 1% of that just for fees. So about 4,300 naira, 4,300 naira, I think that's correct. 4,300 naira plus other flat fees they have. And over the years, it adds up. So, I mean, these are just the first new platforms to come up. I'm sure as time goes on, as the regulations kind of get little less strict, the fees will go down. But for now, they're slightly expensive. That's why I don't love them so much. Any other questions?
Thank you, Chinazom.
Yeah.
Hi, Chinazom. I wanted to ask a question because every wealth advisor always says do your research. But what kind of things should we be looking for? Like what kind of red flags or like what exactly should you notice looking for when you're doing research on what or which of these platforms to invest in?
What are you referring to? Are you referring to stocks or ETFs or bonds or real estate? Like what asset class are you referring
Like ETFs, for example. Let's say I want to find out more about ETFs so that I can start buying them. But what should I be looking
Yeah. So the first thing in terms of doing your research is like first of all you have to take care of the other things you have to take care of. So making sure that you don't have any high interest debt, above 10% or something like that. You have to make sure that you have an emergency fund so that in case there are any emergencies in your life, you can easily handle them without having to pull out your investments from the stock market, for example. So those are the first two things you have to do, and then you have to have a goal. Okay, why are you buying the ETF? If Victoria, if you're the reason why you're buying this ETF is for a very long term, right? So let's say you want to just start saving for retirement, which is maybe in 40 years for you, right? What you can do is then when start looking at the ETF, let's say you just want to hold the US stock market, like just hold the S&P 500 like I described earlier, right? So that's the 500 largest companies in the US, on the US stock market. What you can do is say, okay, now let me look at the companies that are in the ETF. So that's the first thing you do. You look at the objective. I can actually, you know what, I can actually show you one really, really quickly if you guys don't mind. I'll just walk you through how to go through an ETF. Let me just hold on a second. I'll just pull it up and show you.
Thank you.
Yeah, I'm just trying to pull up. Okay, so what I'm pulling up right now is one of the largest ETFs is owned by Vanguard. Vanguard is one of the largest asset managers in the world. It's this ETF focuses on the S&P 500 ETF, which I told you is the 500 largest companies on the US stock exchange. Now, let me just share my screen. One second. Can you guys see my screen?
Yeah.
So you can see Vanguard S&P 500. So now this is the Vanguard. So I just searched for Vanguard S&P 500 ETFs. So these are, as I mentioned earlier, exchange traded fund, and these are administered by Vanguard. Vanguard is just like an asset management company. Um, so you can buy something like this on Bamboo or on Chaka if you're in Nigeria, and if you're not in the country, you can use any brokerage to buy something like this. Now, first thing you do is look at the product summary. So you say, okay, what does this ETF do? You say, okay, invest in stocks in the S&P 500 index, representing 500 of the largest US companies. Makes sense. And the goal is to closely track this index's returns, which is considered a gauge of overall US stock return. So it's just going to be every single thing that the US stock market does is going to replicate it. It's computers that do it. And then what you have to do is you now look at the companies that it has. So now there are 509 stocks in this ETF, which is what I told you about diversification. So let's say you only have $100, right? $100 cannot you buy you one Amazon stock. And one Amazon stock is $3,300. So because you want $100 to go far, and because you want it to be diversified, you buy an ETF, right? So it has 509 different stocks in it, right? The total value is this amount. And now the 10 largest holdings you can see here. So to 28% of this fund is actually held in these 10 companies. So Apple, Microsoft, Amazon. And you can actually see the list of all you click on portfolio holdings to see the list of all the companies that are in this ETF. And you see, okay, does it make, do I even want to hold these companies? And you can also see like a portfolio composition here. Where you can see, okay, 30% of these are information technology. So that's tech. Okay, I want to have tech. That's good. 13% is consumer discretionary. That's good. But imagine if you say, okay, I don't believe in energy. I think that, fossil fuels, for example, I think fossil fuels would actually underperform because more people are moving to renewable energy. Let's assume that this energy company is just for fossil fuels, so that's oil and things like that, and it has 2.3%. But imagine if you had 23%, you say, okay, I don't want to be in this stock because I believe that the energy sector is going to experience a downturn with COVID and a lot of companies don't manufacturing. So that's one thing you look at. You look at the portfolio composition, you look at the top 10 largest holdings. Then the most important thing you have to do next is look at the performance. So this page really shows you the performance. In 1 year, this ETF performed 18.35% for the whole of 2020. So at the end of 2020, the return was 18.3%. Over a 3-year period, the ETF has averaged 14% over 3 years, right? So that's something you can look at as well. And because I told you that expenses are important, how much are you paying? This has 0.03%. That's how much you're paying the fund manager to manage your money, right? So that's also something else you can do as well. And then you look at other things. You look at, I just clicked on another link, portfolio management. I don't know, the internet is kind of slow. It just shows you it's a blend between value and growth. So we have some growth companies, which are like tech companies. You have some value companies. These are like consumer discretionary and the like. It shows you the other technical terms like the price earnings ratio, the price book ratio. So you just look at these things. But usually for the ETF, most people just want to track the performance of the stock market, right? So what you're looking at is seeing how closely it actually tracks the S&P 500. So you can see that if you go to price and performance, it should show you the index, the S&P 500 index, and also the S&P 500 ETF. Actually, 1 second, let me just go to the overview because that would show you better. So you can see that the ETF performance and then the index performance, which is the benchmark or the index that you're using, right? You can see that it's very, very, very close. It will be a red flag if you see the S&P 500 index or the benchmark has done 18%, but the S&P 500 ETF has done 5%. That means it's not doing what it's supposed to do. So those are some things that you look at, Victoria. Does that help?
Yes, it does. Thanks.
Okay. Any other questions?
Hi, Chinazom. Good morning.
Good morning. What's your name?
Rebecca. This is
hi,
Rebecca. Yeah, so I slept off actually. I was trying to set up before 11, so then I slept off. Is there a way we can get a recording? Is that allowed?
Yes, you can. You can get a recording. Yeah, I will send it to you so everyone might know.
All right, thank you very much.
No problem. Any other questions?
Then I can.
Go
Can
ahead.
I send you questions if I have later on?
Yeah, sure, definitely.
Thank you.
My email is chinazom@shecluded.com, so I'm sure if anybody else has any questions, you can ask there as well. We have about 15 more minutes, so if you have any questions, feel free to ask me. If you have, it could be something very silly, so let me know. Just feel free to ask.
Sorry, Chinazom, can I just jump in here with a question?
Sure.
So at what point in the presentation you said, don't waste time, start now type thing. But then later on you're like, okay, but wait to be financially stable. I mean, I know that looks different for other people.
I don't know.
Sorry.
Did we lose her? Uyeme?
I'm here. Yeah, can you hear me? Sorry.
Yeah, please go ahead.
Yeah, I was saying that earlier on in the presentation, you said, start now and don't delay. But then you also said, wait till you're financially stable. And I know that looks different for everybody, but generally, what would you say is a good measure of where you're at to start?
Okay, I was just trying to unmute myself. So that's a good question, but the basic things that you have to do. I was trying to share a document with all of you just to see some kind of what we call a wealth roadmap. Actually, I'm just going to share with you really quickly. 1 second, just so you can kind of see what you have to do before you start investing. So, can you guys see my screen?
Yes.
Okay.
Yeah, we can.
So this is what we call, as Shecluded, is a wealth roadmap. As Shecluded is a wealth roadmap, right? So the first thing you have to do is to get your cash flow in check. You have to make sure that you're spending less than you earn. And the reason why that is important, first of all, for you to do before you even start investing is if you start spending more than you earn, chances are you're going to run into problem down the line. So that means, it could mean that you might have to start pulling out your investments at a time that doesn't make sense for you just because you're not able to handle your cash flow. So that's the first thing you have to do, and it's a habit you have to build first. The second thing is to build an emergency fund. So an emergency fund usually has about 3 months of your basic monthly expenses. So that even if you can't, for example, you can't work, there's no income coming in. I mean, we all know with what happened with COVID, a lot of my clients, at least, a lot of their businesses were affected. Even Shecluded's business was affected. So because for whatever reason, if you can't work, you're sick, the economy is shut down or whatever, you need to have something to fall back on. So that's why you have to have about 3 months at the very least. If you're a mom, you have dependents, you have little kids that you have to, they have to depend on you. You could have 6 months in expenses just in a low risk or in a savings account or in a money market fund that's easily accessible. And the reason why you have to have that is so that if anything happens, if COVID lockdown happens again and you can't make any money, you're not going to pull money from your investments, which you could, if you imagine if COVID lockdown happened and you have like maybe $10,000 invested in the stock market, but around the time, let's say you lost your job, right, and then you needed to actually start taking the money out because you don't have an emergency fund. At that point, the stock market was down about 25-35%, depending on where you were in the world. In Nigeria, it was even worse, right? So now you're locking in a loss of 35%. So essentially losing $3,500 just because, or let's say 25%, losing $2,500 just because you don't have any fund. So that's one thing you have to do. The third is to eliminate high interest debt. Usually, high interest debt in the Nigerian context is anything above 15% interest. And I already told you that the stock market is estimated to earn around 11% a year, right? So think about it as an opportunity cost. You have this debt that's taking out 15% from your income, but yet you're investing in something that gives you 11%, right? It doesn't make sense. So that's why you have to get rid of that first. And then you also have to kind of have a plan for your retirement and then have a risk management plan. So what if something happens? So that's why you have to have health insurance, life insurance, things like that. And then those are the things you should do before you start investing and building wealth. So I mean, for many people, it looks very different. An emergency fund for you might be 300,000 naira, but for somebody else might be 30 million naira. because they have high costs, right? And that's just, it's just relative. But those are the basic things you need to do. Does anybody have any questions? Yeah, I hope that answered your question.
Yeah, it did brilliantly. Thank you.
No problem.
Hi Chinazom.
Hi, okay, how are you?
Hi everyone. Just looking at the roadmap you just shared now, how do you build an emergency fund? Like, how do you create that? How do you become intentional about putting that together?
So the way you can do that, so for my clients, they don't even know they're supposed to have an emergency fund. And especially if you're an entrepreneur in Nigeria, you have to have an emergency fund, because being an entrepreneur in Nigeria is harder than the Olympics. Like everybody's trying to, everybody's trying to get at you, right? Everybody, the government, to relatives, to people from your village. Anyway, what I'm trying to say is that it's very, very risky, right? So to think, first of all, I told you the rule of thumb is about 3 months in expenses. If you're a single person, you don't have any financial dependence. And maybe for you, that might be your basic expenses for the month might just be maybe 100,000 naira, or maybe even say it's 200,000 naira, right? 200,000 naira a month. 3 months, that's 600,000 naira. Let's say you earn like 300K a month, and you have to save 600,000 naira. Think about how much can you actually afford to put aside. Let's say you can only put aside 50,000 naira, not only because it's still a lot of money. Let's say you can put aside 50,000 naira a month. You have to save for 12 months to get to that 600,000, and that's just reality. So that's what you have to do. You just have to save every month for that, and make sure that you're saving. And also, you can also put it in a low risk account, with like a money market account, or using some of these platforms like PiggyVest, which returns like 8% a year, so that it's also giving you some returns, right? But that's what you have to do. Is just saving.
So is the emergency funds the same as your savings, or is that like a different quota? So you're saving and then you're also putting some emergency funds aside. So are they the same thing?
So the purpose of an emergency fund, right, is to deal with emergencies. Saving, you can be saving for school, you can be saving for a pair of shoes, you can be saving for to go to sip on a weekend to pop bottles. So an emergency fund is just for emergencies. Your savings can be for to go to sip on a weekend, or to get your nails done, or whatever. So it's just having that in mind, that this money that I'm saving for my emergency fund, first of all, it should be set aside from your other savings. It should be an account dedicated to your emergency fund, so that you're not tempted to use it for other things. Because when those situations come up, you're usually in a bind, right? And you might have to borrow money or something. So it's an emergency fund is just a fund for emergencies, as the name implies. That would be separate from your other savings. Let's say you need to go to school next year, so you're saving, either dollars or naira for that purpose. But that's a totally different thing. Any other questions? I think we have like 15 minutes.
Okay, thank you.
No problem. Does anybody have any questions?
Hi. Yeah, I was just going to piggyback, and this is probably like beyond the scope of this, but I just wanted to put it out there. The first thing on that list is to get your cash flow in check. And for many Nigerians, the kind of advice most people get is to start a business or something. Would you advise that? Because from what you just said, being an entrepreneur in Nigeria is like harder than the Olympics. So what advice basically for someone who's maybe trying to increase their income or get their cash flow in check in a country like ours, where people hardly want to pay for services and things? And yeah, just my question, if you have any.
Okay, thank you so much for asking that question, Victoria. One thing I would say is, yeah, in Nigeria, people don't get paid enough, and that's just reality, right? A lot of people you find, I mean, the minimum wage is I think it's 18,000 naira. No, nobody in Nigeria can live on 18,000 naira a month, and especially in Lagos, right? If you're in a higher cost of living area. So in terms of getting your cash flow in check, remember there's income, right? And there's expenses. most people in Nigeria
Yeah.
need to focus on the income part. So most people need to focus on making more money. The thing is that you can only lower your expenses so much. There's no way you can live on 18,000 naira a month. I mean, that's just based on my understanding of, a bag of rice is 30,000 naira. So I don't know how somebody can live on 18,000 naira. But so 18,000 naira is no money, especially if you have a wife, you have a kids, things like that, right? So you have to focus on the income part. The first thing you have to focus on is how, okay, let's say you have a job, you have a 9 to 5. How can you make more money in your 9 to 5? Does that mean asking for a raise? Does that mean transferring to a new department? Or maybe you have a business. How do you restructure your business so that you're able to diversify your income streams and make more money? And this concept of diversification does not only apply to investments, it also applies to your life. If you have one stream of income in Nigeria, you're in a very, very risky position. So as a person, you have to think about having multiple sources of income. And that's why investing is good, because investing is another source of income, although it's passive, right? Your investment portfolio. So focus on income, finding ways to make more money, whether it means you're doing a side hustle. I know side hustles sound kind of sexy these days. Having a side hustle, starting a business, doing both, doing whatever it is. And the second thing is also trying to make sure that you're diversifying, you're reducing your naira risk. Because as I said, the naira inflation is upwards of 13% annually. So that means if you were making 500K a month in January 2020, so that's last year, that 500, and you keep making that same amount, right, every month till now, you're actually poorer than you were last year, right? You're actually poorer because your purchasing power reduces because of inflation, because of currency devaluation. So you have to kind of lower your exposure to naira. I mean, I really want to sound nationalist and kind of say Nigeria is the best country in the world and the economic fundamentals are amazing, but it's not. So you have to protect yourself and protect the downside, and maybe hold dollars when you can, so that even if January last year, I think the dollar was 370 naira, and now it's about 470 on the black market. So even if you had a dollar, like let's say you had $1,000 last year, you bought $1,000, that's 370,000 naira. This year, that same $1,000 that you bought is now 470,000 naira. That's 100,000 naira difference. So that's also something that you have to be thinking about as well.
Thank you.
No problem. We have about 10 minutes. Anybody have any questions? Let me know if you have any questions.
Have you ever invested with the Nigerian Stock Exchange?
Yes, I do. I do invest in the Nigerian stock market. Yeah, I do.
Is there like a comparative difference between, I mean, of course there is, but like just in terms of movement and growth and all of that?
As I said, you have to have like a global mindset, right? There are opportunities in every stock market. There are opportunities in every stock exchange. Personally, when COVID started and when I moved back to Nigeria, I realized that I felt like telecommunications companies would do well. So I bought some notable telecommunication companies, and I'm up almost 60% in from what I bought. Like I think I bought in April or May or something like that last year. So and then also there are also investments I have in the U.S. stock market that hasn't even given me 3% a year, right? So it just depends on the actual asset in question. There's no one you know you can't paint it with a white, like a paint white stroke. But yeah, so I have experience investing in the US stock market, Canadian stock market, Nigerian stock market, UK, and yeah.
All right, thanks.
Anybody have any question? We are going to wrap up. I'll just give a reminder. So if this has been too much for you, you just feel like you can't understand it, you can't grasp it, feel free to use our services. We do wealth advisory, so you work one-on-one with the wealth advisor. I'm a wealth advisor. Shecluded, there are other wealth advisors as well. If for a 1 hour session is about 20,000 naira for a one-time plan. But if you really want that accountability where somebody makes sure that you're doing what you said you were going to do, let's say you wanted to put $500 in the stock market, when you start investing by January 30th, you want someone to actually call you, like, hey, Ada, have you actually done what you said you were going to do? Where are your people? Let us know. We can always assist you and help you along the journey. And you have a 10% discount if you book today using that code, which is already activated on the account, on the website. So it's shecluded.com, and you see our Shopify store, our product page, and then you can also email me at chinazom@shecluded.com as well. So yeah, that's that. If there are no other questions, I'll just give you a few minutes. Does anybody have any questions? I just took a screenshot of all in attendance so I can make sure that. So if there are no other questions, I would like to say, oh, sorry, I think somebody just posted a question. Can I buy shares in Canada from Nigeria? Yes, you can, using those platforms, Bamboo and Chaka. I think, to be honest, I don't know if they have Canadian stocks. I know they have US stocks and US denominated ETFs. So I don't know if they have Canadian stocks. But I don't know. But Bamboo and Chaka, I know you can trade foreign stocks on those platforms. And somebody, Akinwumi asked, hi Chinazom, please could you share the slides? Definitely, I will be sharing the slides with you guys probably in a few days. So if there are no other questions, thank you guys so much for joining us. Again, my name is Chinazom Chidolue. I'm the head of wealth advisory at Shecluded. Feel free to email me at chinazom@shecluded.com if you have any questions. Feel free to follow the shecluded.com or Shecluded Instagram page as well. At Shecluded, we offer loans for women entrepreneurs. We offer business advisory. So if you have a business and you have questions for your business, feel free to ask us. If you want wealth advisory services, we can also help you. Yeah, thank you guys so much for allowing me to take about 1 hour, 30 minutes in your Saturday. Thank you and have a wonderful weekend. Bye.
Thank you. Bye. Thanks.
Bye. Thank you.
Thank you.
Thank you.
Thanks.
Bye. Bye, everyone.
Bye.